Today, we are jumping into one of the most, frankly, shocking financial announcements in modern corporate history. Meta has just laid out a spending plan so huge, it's making everyone completely rethink the future of tech, AI, and maybe even the whole global economy. So, let's break it down. $135 billion. Just let that number sink in for a second. That is the high end of what Meta is planning to spend on capital expenditures in a single year, 2026. This is not just a big number, it's an amount of money so vast it is literally unparalleled in the history of corporate spending in the tech world.
And yet that brings us to the big question, the one we're really digging into today. Why? Why is a company that just went through a really tough year of efficiency, laying off thousands of people, now committing to spending that completely dwarfs its competition? This is the story of that bet.
So to really get what's happening, you have to understand the massive pivot they've made. 2023 was famously called the year of efficiency by Mark Zuckerberg. It was all about discipline, cutting costs, focusing the business. Well, that era is officially over. Meta is now in a totally new phase of what you can only describe as aggressive, full-throttle acceleration.
This quote really frames the new mission perfectly. It's a huge shift from just being efficient to building the actual infrastructure for artificial general intelligence, AGI, AI that can reason and learn like a human. And the goal is to get that power directly into the hands of consumers. And this just shows you the insane scale of that shift. Look at these numbers. In 2023, they spent about $28 billion, a little bump in 2024. Then in 2025, boom, it more than doubles to $72 billion. And then in 2026, it could nearly double again to a potential $135 billion. This isn't just a gradual ramp-up. This is what the source material calls a capital shock. It's an explosion in spending.
Okay, so when you see a timeline like that, the next logical question has to be how? How on earth can any company afford to ramp up its spending that dramatically? Well, the answer is in the unbelievable power of its core business.
It all starts with their core ad business. In late 2025, Meta didn't just meet what analysts expected for revenue, they blew past it. We're talking 24% year-over-year growth. Their advertising machine is in the best shape it's been in for 5 years. And that's the engine that's funding this entire race for AI.
But here's where it gets really interesting. While that revenue grew a super healthy 24%, their total costs and expenses shot up by 40%. And that huge gap right there tells the story. They're making more money than ever, but they're spending it even faster, which is squeezing their profit margins.
So where is all that money going? Well, it's really a three-pronged attack. First, you've got infrastructure, all the costs of those new data centers and servers. Second is talent, hiring thousands of very, very expensive AI specialists. And third, you have marketing for their new products, like the Ray-Ban Meta glasses.
But even with that 40% jump in costs, get a load of this number. $14.08 billion. That's Meta's free cash flow, the actual cash they have left over after running the entire business in just one quarter. This is their superpower. It means they can pay for this entire historic build-out from their own operations. They don't have to borrow a single dime.
And hey, just a quick side note to clarify something. If you go and look at their net income for the full year in 2025, you might see a little dip. This is why. It wasn't because the business did poorly, it was because of a big, one-time tax charge from new legislation. Without that, their net income would have actually been much, much higher.
So, we have established they are an absolute cash printing machine. Now for the really exciting part. What in the world are they building with this $135 billion war chest?
It really boils down to three huge things. First up, AI compute. They're buying the latest, most powerful chips from NVIDIA, like the Blackwell series, and they're also building their own custom chips. Second, next-gen data centers. These are brand new facilities built specifically for the massive power and cooling that AI demands. And third, energy infrastructure. We're talking about gigawatts of power, so much that they might even partner on nuclear energy to keep these things running.
So this massive build-out creates this really fascinating strategic showdown. See, Meta isn't just spending more than everyone else, they're spending it in a completely different way. And that difference is a monumental gamble.
And this is where you see the two big philosophies clashing in the AI race. You have Microsoft, Google, and Amazon building all this massive AI infrastructure, mainly to rent it out to other companies through their cloud services. But Meta, they're building all of this almost exclusively for their own stuff. It's a classic high-risk, high-reward strategy.
And check this out. This chart just shows you how incredibly all-in Meta is on their strategy. In 2026, they're on track to outspend Microsoft, a cloud giant, by potentially more than $37 billion. And remember, Microsoft makes money directly by renting out its servers. Meta doesn't. This is just a truly audacious move.
And the risk here is just enormous. This quote from analyst Michael Del Monte sums it up perfectly. If Meta's AI models and products don't turn out to be revolutionary, if they don't massively improve their ad business or create totally new ways to make money, then this $135 billion infrastructure becomes an anchor, a huge, expensive weight on their profits.
But, on the flip side, here's the massive opportunity, which Morgan Stanley's Brian Nowak lays out. Meta has something its cloud rivals don't: billions of users and all the proprietary data from its apps. The bet is that they can use this AGI they're building to cash in on that data and distribution indirectly. Think super efficient ads and new AI services, and they could do it with much higher profit margins than the cloud companies.
So that's the battleground. You've got this colossal amount of money being thrown at a strategy that's fundamentally different from its biggest competitors. It's really setting the stage for what's going to be the most fascinating corporate showdown we've seen in decades. So when you boil it all down, it's this. Meta is using its insanely profitable core business, a true fortress of a balance sheet, to fund a historic all-or-nothing bet to basically own the future of intelligence itself.
Which leaves us with one last huge question. 10 years from now, are we going to look back at this $135 billion bet as the genius move that created the next generation of computing? Or will we see it as the world's most expensive and maybe most ambitious folly? The next few years are going to tell us everything.